Hello, this is Lizzie. Welcome to today's episode of MTrading Global Market Recap. In today's news, the US dollar remains in a difficult position this week, holding just above the 27-month low that was reached the day before. The growth of the US stock market to absolute highs sets the vector for risky assets, as well as the growing tension between Washington and Beijing on international trade issues, which is the main contributor to the fall of the American currency. The dollar index has fallen more than 5% since the end of June, making it the largest one-month loss in a decade by the month of July. The dollar was sold as investor sentiment for higher risk assets, which may improve. Investors are betting on a stronger economic recovery outside the United States. The head of analytical department at MTrading expressed doubts about the progress of US in the fight against the spread of COVID-19. And the ongoing trade dispute between US and China contributes to fears that the Congress will not be able to agree on a further aid package, putting huge pressure on the dollar. The growth prospects for the United States, which is lagging way behind Europe, is becoming slimmer. The Economic Surprise Index, which measures the difference in economic data compared to analyst forecasts, showed that the US economic recovery has stalled in recent weeks, while the European index has remained strong. Investors will be watching for minutes of the recent meeting of the Federal Reserve System, which is due to be released at a later date, for further action they may take in September. Fed's fund rates do not show that investors expect interest rates to change until the end of 2021. If the protocol turns out to be much better than the market expectations, then the US dollar will receive an impulse for a reversal, which will be the beginning of its midterm growth. This is all for today. Please subscribe to the channel to get notifications on the latest news. Continue to stay safe and do have a wonderful day. Goodbye.